American businesses are booming in 2025, despite persistently elevated interest rates and a job market that leaves those looking for work wanting. The market is performing for investors. Earnings continue to beat estimates, and for the biggest businesses in the S&P 500, they continue to grow at a torrid pace given their size. We now have an astounding 9 businesses with over a $1 trillion market cap. There's the Mag 7, of course, and now we have Broadcom and Berkshire Hathaway. So, on that point, as the biggest businesses continue to grow, I thought it would be interesting to see who is next. What businesses are poised to join this $1 trillion market cap club, and who is close but will struggle to get there? Welcome to the Quality Investor. It's staggering, really, the heights American business has reached. Nvidia became the first to surpass $4 trillion in market cap. And while this is a terrible comparison, that would place Nvidia in the number 4 spot in GDP rankings across the globe, just behind Germany and ahead of India and Japan. Google became the 4th and most recent addition to the $3 trillion market cap club after climbing 22.8% in the last month. Amazon needs to climb about 20% to reach $3 trillion, and Meta is set to hit $2 trillion any day now. Even Broadcom, with 55% year-to-date growth and 119% growth on a one-year basis, could hit $2 trillion by year-end. They're only 17% away. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. So, the $1 trillion market cap club, while currently exclusive, will certainly expand its membership in the coming months and years. There are a handful of businesses out there set to reach this milestone very soon. Some are pretty obvious, and some are close, but in my view, it won't be as easy as it seems. So I'm going to review the crop of businesses with a market cap over $500 billion, since all of them would have to less than 2x to reach $1 trillion. And take note of that for a second. A $200 billion business, considered a mega cap, would need to 5x to reach $1 trillion. A $100 billion business would need to 10x to reach that mark, a 10-bagger. For context, Starbucks has a market cap of about $94 billion. Now imagine a situation where Starbucks 10x's from here, a business that has completely saturated their market and has basically flat revenue for the last 3 years. It's hard to imagine Starbucks being 10 times the size they are now. But I believe that points out how tough it is to grow that big. Starbucks, by any measure, is massive, but they are less than 1/10 the size of Berkshire Hathaway. For that reason, I won't predict any businesses less than $500 billion in size. On the Quality Investor, I like to analyze and buy businesses that have strong moats, grow reliably and predictably, and compound free cash flow. I do not, however, predict how large they will become, partly because I prefer to simply hold once I buy, but also because that type of growth is incredibly difficult to spot. I'm under no illusion that I can succeed like Peter Lynch. But back to the qualities of this channel. The collection of businesses I believe are about to join the $1 trillion market cap club all have certain things in common. They each have wide economic moats. They have predictable and reliable growth and revenue. And they compound their free cash flow, which is ultimately what generates returns for their investors. So, without further ado, let's get into it. This is the list of all the businesses we're going to be looking at today. You can see Nvidia here heads the list with nearly $4.2 trillion market cap. Berkshire just crossed the 1 trillion mark. It's kind of been bouncing around a little bit this year. And you can see here, JP Morgan Chase sits at $857 billion in the market cap, all the way down to Netflix here with a $522 billion market cap. Now, we have a few $400 billion market cap businesses here, and I'll speak to those real quick. So we have ExxonMobil, that's at nearly $500 billion, Costco, Johnson & Johnson, and Home Depot. Of these 4 businesses, the one that's most likely to attain a $1 trillion market cap within the next 5 to 10 years and remember, that would be 100% growth, over 100% growth actually, is most likely Costco. And that's because Costco has a business model that's been successfully replicated internationally. Very few US retailers have been able to successfully replicate their business model on an international scale. Costco has done that. So they have an aggressive warehouse opening plan, and if they achieve that, I could see them hitting $1 trillion within the next 5 to 10 years. ExxonMobil, now this is an oil company. And right now, oil dominates our economy. Even though electric vehicles are starting to gain market share, we're still a completely oil-based economy. However, oil is also very cyclical. Could ExxonMobil hit $1 trillion in the next 5, 10, 20 years? Absolutely. Will it struggle to get there? Yes. And that's because of the cyclicality of the energy sector. Johnson & Johnson, now this is the definition of a slow grower per Peter Lynch's investment types. They will inch along at 3 to 5% growth per year in the revenue aspect of things, and it will take them a long time to get to $1 trillion. And same with Home Depot. They're the largest home improvements retailer in the US. They were not successful implementing their business model internationally. So they've already saturated the US market. So outside of growing same-store sales by 10% annually, it's going to be tough for Home Depot to reach that mark as well. So Costco will reach it the soonest of these 4 non-$500 billion ones. All right, so let's look at the $500 billion ones. JP Morgan, Oracle, Walmart, Eli Lilly, Visa, Mastercard, and Netflix. I'm going to show examples of a couple of these to show why I think they'll easily attain that $1 trillion valuation within the next 2 to 3 years, as well as showing you an example of why I think it'll be tough for Oracle to achieve that $1 trillion mark despite the crazy return that they've had so far in 2025 of almost 81%. Let's look at Oracle here. Oracle has a $856 billion market cap. They're about 17% away, but they had a huge market cap pop post earnings earlier this month. They gained nearly 30% in one day after their earnings. To be fair, Oracle was having a very good year. They had a market cap at around $677 billion, and they'd already had over a 40% return year to date. So I'm not taking anything away from the year that they had. But what we want to look at here is, can they sustain that growth and not only hit that $1 trillion, but maintain it and continue to compound on that thereafter, like the other $1 trillion market cap businesses do? I think they'll hit that $1 trillion sooner than later, but I don't know how sustainable it's going to be, at least in the short term. A large part of Oracle's pop post earnings was they had a massive remaining performance obligation number. I don't believe they beat their earnings either on the top or bottom line. Please correct me if I'm wrong on that. But the market loved that RPO, or that remaining performance obligation. If they have a slight miss in the next quarter, the quarter thereafter, that stock price is going to plummet back down to where it was before. And again, they're going to have to start that climb all over again to $1 trillion. And my reason for that is they don't have great revenue growth over the last 10 years. It's starting to grow more consistently in the last 3 years or so. Earnings pretty flat over the last 4 to 5 years. But really, look at the free cash flow. Up until about 2021, it was completely flat. Dove a little bit in 2022. It has since climbed back up, but now, granted, they had a huge capex here in 2025, but they're not generating compounded free cash flow like you're going to see with some of the other businesses. And until they start compounding this free cash flow on a reliable and predictable basis, I feel like it's going to be very tough for Oracle to surpass $1 trillion and to continue compounding on top of that from there. And another business I believe is going to have a tough time maintaining a $1 trillion plus valuation once they do hit that is Walmart. Now, Walmart is the largest business by revenue right now in America and will most likely be surpassed by Amazon very shortly, actually. But they've saturated the American market. Now, they've done a good job overseas, similar to Costco. So there's opportunity internationally there. And I'll touch on another growth area for Walmart here in a second. But if we look at the return on a 10-year basis, it's at 17% annually, which is very good. But on a 3-year basis, at 33% and then 32.6% on a 1-year basis, meaning they've seen most of their return in the last 3 years. But what have they done to earn that? Yeah, their earnings have gone up, but the free cash flow is not compounded. The revenue's risen, but it's only rising 6% per year on a 3-year basis. I mean, does that justify a 39.2 PE? That depends on what their international expansion is going to do. This free cash flow is not impressive. I would avoid Walmart simply because of this free cash flow. But they do have one area of growth that is going to benefit them, and that is online. Walmart has done a very good job adjusting to online retail. In fact, Walmart has more subscriptions, or members, I guess, to their online community than Costco does for their membership. And Walmart has pretty much become second place for online retail behind Amazon now. And together, Walmart and Amazon are crushing Target. But yeah, Walmart might grow into the $1 trillion. To me, they're a very slow grower. I don't know how they're going to maintain these returns consistently over the next decade, but I don't see them growing much faster than this 6%-ish here per year. Now let's look at Visa. Visa has a market cap of $671.95 billion, and I definitely think that they'll be at $1 trillion market cap within the next 2 years. In order to do that, by the way, they would have to earn a 2-year compound annual growth rate in their share price of 21%. So not only will Visa hit that $1 trillion market cap, they're going to continuously compound past that and just keep growing and growing. But let's look at why. They have very reliable revenue growth, gross profit growth, operating income growth, their earnings per share continues to rise at a very reliable rate. You can see up here their compound annual growth rates over the years. 10-year revenue of 11%, 11% for gross profit, almost 11.5% for operating income, 16% for earnings per share. Free cash flow has grown at 10.9% annually, and the returns as well on a 1, 3, 5, and 10-year basis, very consistent over the years. So this is a very reliable company. They use nearly all of their free cash flow to either pay their dividend or buy back shares, so they reward shareholders, and then they compound that free cash flow growth over time. You can see the steady increase here in free cash flow, and this is what contributes to the return for investors. Even their market capitalization over the years has just steadily increased. This is the definition of a compounder. When you're looking for businesses to invest in, these types of growth charts for their main fundamental metrics is what you want to see. Continuous, reliable growth, revenue, free cash flow, the hallmark of consistency for Visa. And I usually do a video on Visa's earnings every single quarter, so you should definitely check that out. And in there, you'll see why I think that they have such good growth prospects heading into the future. Mastercard is right behind Visa at a $541 billion market cap. I also think they're going to be at a $1 trillion market cap within the next 2 to 2.5 years. Almost a clone of Visa. Obviously, they're not the exact same. They focus on separate core markets. But generally, their fundamentals are very similar, and I expect Mastercard to also compound heavily into the future over the next decade. And the last company I want to talk about today is Netflix. Netflix has seen their returns turbocharge over the last 3 years. You can see on a 10-year basis, they're at 28% annually, which is amazing, by the way. But on a 3-year basis, they returned 72.3% a year for investors, and on a 1-year basis at 73.78%. And year to date, they've already returned over 37%. So this is an excellent business for investors. They have a market cap of $522 billion. So they'd almost have to 2x from here to get to $1 trillion. But I don't think that's going to be a problem at all for Netflix. And the reason is they have the best type of revenue you could possibly have, and that's subscription revenue. They've grown that very reliably over the last 10 years. And in fact, they've started to accelerate that revenue growth from their 3-year basis of 9.5 up to 15.7% on a 1-year basis. But the biggest catalyst right now for Netflix's growth is this right here. Their free cash flow was negative up until about 2020. They hit positive free cash flow for the first time. Now, they went negative again in 2021, but since then, they haven't looked back. Now they're free cash flow positive, and they're compounding that free cash flow. And the future is very bright from Netflix. I did a Netflix video about a couple months ago, and in there, I posited that they not only won the streaming war, they dominate the streaming war. Netflix has an advantage over the other streamers, and that they were first to streaming, so they have first movers advantage, but Netflix also focuses purely on streaming. So they don't have a lot of the other overhead that the other major streamers have. For Amazon, Prime Video is almost like a side project. Same with Apple TV for Apple. Disney has struggled in their streaming market, but I suggest you check out that video because I really break down why Netflix is so superior as a streamer than the others and what they're doing to not only maintain their stranglehold on the streaming market, but expand it, primarily with live events. So Netflix is doing a great job, and they're going to continue to compound it. In fact, I can see Netflix hitting $1 trillion faster than both Mastercard and Visa and continuing to compound up with the best of the Mag 7. So this was a quick video today to talk about businesses that are poised to join that $1 trillion market cap club. American business continues to boom. And despite a lot of talk out there about being in a bubble, one major difference between this time around and some previous bubbles is we have earnings to back all of this up. So please enjoy this bull market while it lasts. And as always, we're going to continue to talk about the best businesses in the world on The Quality Investor. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.